Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 19th, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. I have a great presentation for you, so let's get right into it. So S&P 500 are trading next to records. NASDAQ is still underperforming slightly. S&P 500 and small caps are doing quite fine. I think the danger of significant volatility has more or less passed. I was worried about March, so we'll examine two stock funds that I think are representative of why I even thought volatility should be coming. And last summer I briefly became a Precog, so if you watched the Minority Report you will know what I'm talking about. And I saw the future, and I'm gonna describe why Caterpillar trade worked. And bond market, we're gonna go over a lot of bond markets. Bonds looks extremely vulnerable still, so we will look for interest rates pulling back potentially. Gold and silver are just really close to a collapse, I think. If dollar strengthens even a little bit more, we could see a significant downside for gold. Random crypto, I have no idea. Enjin coin, it's tradable. I can show you how to trade it. Very interesting, just completely random crypto. And two of my other newsletters, you can kind of see it doesn't fit even. There's a lot of stocks, so I have free newsletter, what you're getting right now, what you're listening to on YouTube especially. And I have two of the paid newsletters. One is called Elite, and there we cover ETFs and various large cap stocks, and I'm going to cover all of these stocks for a members only video. And separately I have another newsletter called Speculator, and I'm going to cover all of the speculative stocks there. Okay, so very briefly, how to find me on the internet. Go to MasterChartsTrading.com. You can also go to EveryoneCanTrade.com. It will take you to the same place. So I have currently I have three different bundles. And I'm actually very excited to tell that the advanced scanner is now available. So what does the advanced scanner do? It truly scans the universe of stocks. Advanced scanner, we're scanning close to 9,000 stocks, so pretty much everything on the United States stock market on all three exchanges, American Exchange, NASDAQ, and New York Stock Exchange. We're scanning stocks for various setups that fit my indicator parameters, and lots of new groups to scan through. For example, gold and silver miners, semiconductors, biotech, dividend aristocrats, and there's probably 30 or so total new groups. There's also new features and updated interface. So additionally, so this is going to be called Advanced Speculator, because this thing is really truly powerful. So you'll find all kinds of cool setups. The Speculator bundle is currently at $69.95, so I dropped the price a little bit. However, you only get a basic stock screener, not the advanced one. So advanced stock screener is by far more powerful. So consider signing up, and that would be the end of my advertising for today. All right, so let's get right into it. First of all, what are the indicators? So indicators on this chart are this green, blue, red, and yellow lines. So basically the way I use them, these are my proprietary trading indicators. They are available for TradingView.com. So this is TradingView.com interface. I'll be using it throughout this presentation. I use nothing else. I only use these indicators to trade exclusively. I don't even use volume, you can see. And they work just marvelously. So we make tons of money at MasterCharts Trading, and especially now we're trading options, and it's just killer trades, absolutely killer. So briefly, looking at S&P 500, going back to last year, I already showed it multiple occasions, but the breakouts occurred back in April of last year, so exactly almost a year ago. Since then, we're only thinking about buying. We're not thinking about selling. If you have longer-term investments, for example, like retirement accounts or 401ks, then it's one of the ways to do this is, to trade retirement accounts via funds. So there are always, certain funds within the retirement accounts that are just basically mirroring the S&P 500 or the NASDAQ or the just overall, stock market. And using my indicators, you can easily do that. You can just say, okay, so here on April 29th of 2020, the stock closed above the blue line. So for me, close above the blue line means bullish. We're going to be going up from here on. I'm thinking bullish. I'm thinking about only buying. If it going down, if it closed below the yellow line and then bounced towards the red line, like for example where I'm hovering here on 27th of March 2020, I'm gonna zoom in. That's a thinking about shorting, but you can see it's a purple arrow, and I didn't really send this alert because I just didn't think that it's going to go down from here on, and I was correct. We got a strong rally. Right now we're basically pulling away from the records. We set records yesterday on 18th of March. Not much to say except for if you have a position, then I would be holding it, and I would be trailing at the blue line itself. So when the stock, or in this case futures, come down towards the blue line, then I will exit this particular transaction, which began way back when in April. Looking at NASDAQ, similar picture. You can see that this is a purple arrow because NASDAQ broke out a little bit earlier. It broke out on 13th of April, 14th of April 2020, while S&P broke out on 29th of April. So in my mind, I like to see everything congruent. So I like to see S&P above the blue line before I start buying anything else. And NASDAQ broke out just a tiny bit earlier. So if you were, bold and just more decisive, I guess, then you could have gotten here back in April 2020. And notice that since then, there was really no good opportunity to get in. Because where do I want to get in? I want to get in around the blue line. You see, I call it strong support. So right this instant, NASDAQ is underperforming. This is a new record back in February of this year, rather. And we came down to what's called the weak support, and we're just kind of trading around it. Notice also that the lines are kind of curving up. So this means that the prices, even though it's kind of traded more or less sideways, but the indicators are curving up. So what does that mean? That means that the support is coming towards the price. You see how it's curving up? So actually, it could be viewed from two different angles. One is if the price comes down towards the blue line, it will be quicker. There will be faster place to buy, I guess, because it's less distance to travel, right? But from the negative perspective, we can say, but wait a second, we're also approaching the bear market, because the bear market is way down here at 204, the yellow line, you see? So two ways to look at it. It's either that we're getting closer to a good place to buy, or vice versa, we're potentially reversing, or that there's a very, very beginning stages of a reversal to the downside, in other words, into a bear market. But to get to the bear market, we're still just like miles away. So this is how far we need to drop to get to the bear market. That's 34% drop from today's levels. Extremely unlikely that it will just collapse and if it's going to come down slowly, most likely it will get stopped at the support, which is currently at 278. Looking at look at small caps, IWM. So also new all-time record right there on 15th of March this week. Then kind of just pulled back, but notice, you know, the way the shape of this curve also is, you know, it's extremely bullish. It's I mean, I can't express my bullishness any stronger than it is already. You know, it might pull back a little bit, but once again, we are looking for a pullback as an opportunity to get in. A great opportunity to, you know, think about getting in would be around currently 184, the blue line. So that's about 19 to 20% down from current levels. Is it gonna happen? Nobody really knows, and once again, it's it's really difficult for people, especially the beginners, to understand that even the professional people, you know, who trade millions, sometimes billions of dollars in other people's money and clients' funds, even though some of them say that they know things about the future, the truth is they don't. Okay, so my next segment actually has to do with, you know, in a couple of minutes I'll show you what I mean about trying to predict the future. So a couple of funds I wanted to look at is Brazil, and the other one is utilities. So with Brazil, this is Brazil, EWZ, and we actually have a trade open. You know, there was an opportunity to buy right there on the 17th of December. Before that, you can see that Brazil actually never even broke out. Whereas S&P broke out in April of 2020, Brazil never did that. And notice that we actually had downward facing arrows. So what does that mean? That means that if you're sophisticated and you can buy puts or sell short outright, then you could have played it. You would have been somewhat correct and you may have made some money, but overall, this is precisely the reason why I don't really like to short equity during the general bull market. And people ask me, how do I know it's a general bull market? And you need to only look at one thing to determine if currently the stock market is in an uptrend or in a bull market. So put my indicators on, look at S&P 500, S&P ETF SPY or whatever, and ask yourself one question. Is the stock, in this case S&P 500, above the blue line? Yes, it's been above the blue line since last May. Has it since last May, has it closed below the yellow line? No, it hasn't. So therefore, the current situation, current conditions are of bull market, because S&P 500 has indeed closed above the blue line, has broken out into a bull market, and has not yet broken down into a bear market. The bear market is Lord knows where. Okay, it's 30% down. So once you have asked yourself that question, is the stock market in an uptrend? What should I do about other stocks or other funds? And usually when I ask myself a question, is the stock market in an uptrend? And the answer is yes. Then the other answer is I should only be buying other things. Okay. So in this case, EWZ, the Brazil, even though technically, yes, it wasn't a downtrend, and yes, technically you could have shorted it back here in June, or several more opportunities in September, and you would have made some money, because most likely you would have been profitable here in late October, but then you would have been stepped out a few weeks later. And then you can see a breakout. This is again another actual opportunity to buy Brazil. In fact, I have some Brazilian shares. I have a couple of Brazilian shares, which I will cover in Speculator. So this is Brazilian, and then this one as well, Banco Bradesco and Gol Airlines. So looking at Brazil, what I was worried about is the way this indicators came down, and what I was kind of worried about is that it's going to come down and just collapse lower, but it hasn't happened yet, and in fact we kind of broke out above the blue line, and I think now the blue line is going to be acting as a support, and I think we're going to go higher from here. So this, one of the reasons why I was worried is just the way the indicators were coming down, the narrowing of a trading range, so the distance between the green and the yellow line was significantly narrower than, let's say, it was back here in September. So I was worried we're going to get a reversal. We're going to come down and continue lower. It hasn't happened yet, and looks like we held support here. So this is another positive sign that I'm observing. Another, you can kind of see similar pattern. You can see that we're kind of, indicators were curving down, and I was afraid we're going to see price action continue lower. Right this instant, you can see that there's a strong move higher for the indicators, but just the way it's looking, it doesn't look too bad. So I am quite optimistic that we're going to hold here and just start making new records again. And this is especially true later on when I get to the bonds. Excuse me. When I get to the bonds, I'll show you when I get to the bonds, I'll show you that since utilities are more dependent on the interest rates, we'll see if the interest rates drop, then utilities should benefit, because the utilities need lower interest rates in general. So we'll see if this kind of volatility has indeed passed. So it looks like, we're right now 19th of March. We're almost through March. March for me was like the scariest period because of the way the indicators were behaving. All right, so this is kind of, I thought it was a funny thing. So if you guys watched Minority Report, if you read Philip K. Dick, I read a lot of Philip K. Dick. I read a lot of science fiction. I love science fiction because it sort of opens your mind and just gives you ideas about what's out there, what's possible. This is let me show you. So this is me right now, and this is me, back in when was this? This was in the summer of 2020. Yeah, so you can see that I wasn't they shaved me. So right now it's, anyways, you get the joke. So I don't know the future. I don't know anything about precognition. I don't have any abilities to see the future. The only thing that I am able to do is look at my indicators. And we're looking at Caterpillar. So Caterpillar is they make earth-moving machinery. Earth-moving machinery to make all kinds of things like roads, bridges, railroads, you name it. So they make things that are used to build infrastructure. And back in June of last year, do you think I knew anything about March of this year, so almost close to a year ahead? Did I know that President Biden will be the president now? No, I didn't know that. Did I know that they're going to be passing this huge infrastructure package as a part of the COVID relief bill? No, I didn't know that either. And even if I knew that, then I wouldn't know the reaction of the stock market, because quite often stock market reacts in a completely unpredictable way to seemingly good news. In this case, the package was passed like just right there in early March, but the anticipation of this package passed, or the anticipation of the increase in price of the stock was significantly earlier, right? It was in the summer, and these are actual alerts. So if you took it, congratulations. So, just demystifying this technical trading is people get so scared. There's all these lines and all this colored stuff. In essence, there is no mystery about this. It's pure math. I've been at it for close to 10 years. So I just sort of have more of a feeling of what to look for. But even if I didn't have, any feelings about it, and I'm only blindly looking at this chart, back in April, May, June, July of last year, and it's clearly breaking out. So I would have just kept buying it here. These lines are not drawn in. These lines are calculated. You see, this is math. And so congratulations, you got in quite early. Notice that there was really no way to. The blue line wasn't triggered. It wasn't touched. So you should still be in a position. You may have taken some profits. Great opportunities to take profits are when the stock comes up above the green line and then comes back down. So, for example, right there or right there. So if you get in, congratulations. But this is the type of trades I love doing. Is that we get in and we just sit. If you have options, it's more difficult to sit because they have a decay. They decay fast. They have a theta decay. But if you have the actual stock, you can sit forever and also get dividends. Anyway, so this is my precognition story, and hopefully you can understand what I'm trying to get at. And the fact is, you just need to have a reference point. So my indicators provide the reference point. And once you have a reference point, everything becomes super easy. Right, so let's look at now various bonds. So from here on, we'll look at various bonds. This is junk, JNK. So what is junk bonds? Junk bonds are low-grade corporate bonds, mostly corporate. Sometimes there are things also sovereign bonds, but I think mostly it's corporate bonds. And low-grade corporate bonds, think they're basically stocks. The way they trade, they're basically trading like stocks. So you can kind of see that it was similar picture to the S&P 500. S&P 500 broke out back in April. Junk bonds broke out on the 9th of April. So this is another big reason why I just did not want to sell short the stock market back in April of last year. Is because I know, again, this is from just experience and correlations. Correlations meaning that if the stocks move one way, junk bonds will move normally the same way. So junk bonds and stocks move together, and this is the reason why I did not think about shorting the stock market back in April of last year. So right now we're just basically watching the junk bonds, the action. You can also see that we're now coming up with the indicators. So this is not an ideal situation because we are getting closer to the bear market, but once again, the bear market is way down there, so there is still a lot of room to fluctuate. Now we're moving higher in the quality of the instruments. So before we were looking at the junk bonds, now we're looking at municipal bonds, MUB. So this is things like California or New York bonds that are in here, for example. So right this instance we're what's called at weak support. So not a normal kind of trading. Same thing. Basically, we broke out here back in April, even earlier. I mean, this thing broke out in March. So another reason why I didn't want to short the general stock market. Notice again, really good opportunities around the blue line, especially the 27th of April of last year. Killer opportunity for municipal bonds. Right now you can see a strong narrowing of a trading range. So what are we seeing? There's the narrowing, there's the range back, in January of this year. And here's the same range currently. So notice how much it narrowed. It used to be 12 points, now it's 8.6 points. So this is a significant move, and we're, as I said before, we're looking at strong support, which you can see it moved up. So it's like right there. Weak support, we're at weak support right now. So let's see what the action will be like once it gets to strong support. If it kind of bottoms here, that's really good news for the municipal bond investors. But if it doesn't, we can see that the bearish levels are not that far off. So municipal bonds will have easier time to get there. And here's how it would look once the bear market begins. And here's MBB, which is a mortgage-backed securities, mortgage-backed bonds. So current picture, notice that the blue line, the support, did not hold. It just kind of continued through it. I mean, right there on the 25th of February, price action wise, yeah, it tried to bottom here, but it failed and then continued lower. Now it's unequivocally bearish because we're actually below the yellow line. 100% bearish. This is unequivocal. So, if I had mortgage-backed securities, what I would be looking for, a move, maybe something like that. A slight bounce currently towards the red line, like 109 or so. And you can, this is a next generation which is coming. So next generation of indicators can offset into the future, can project price action into the future. So looking at the future, again, I'm not Precog. This is not precognition, this is projection. This is pure math, okay? So you can kind of see how narrow the trading range is, super narrow. So a lot of volatility that most likely will be in the near term, but I am seeing a strong potential for a bounce, but that bounce should be shorted. So if it gets to this, currently around 109 or so line, I would consider selling it, shorting it. Same goes for LQD. So this is investment grade corporates. So it is currently at the blue line, currently at the support, but it's actually below it already. So not exactly encouraging. Here is the projection into the future. So very close to bearish levels. Bearish levels are like right there at 120. So we're basically there. See, that's what I'm trying to explain to you. This is the narrowing of a trading range. So see how wide the trading range was? It was like 22 points just recently, and now it's gonna be 8 or 9 points. You see? So during those narrowing of trading ranges, we can see changes, significant changes of trends. So if it was going up, it could be going down soon. And this is exactly what happened with treasuries. This is TLT Treasury Bonds. So where I'm hovering is 6th of January, the date of the Capitol riot and the insurrection and all of the ugliness that came with it. Breakdown occurred on that day, as I have repeatedly mentioned it broke down on that date, but it doesn't mean that I used that particular event in my analysis. So even though it broke down on the date of the insurrection, it's not the reason why I would have shorted it here. You see, the only reason why I would have shorted it here, in fact, I sent this to my subscribers. In fact, some people took the opportunity and bought puts and made good money here. So that's the only reason, is because on that particular date it broke down. If it could have broken down on a different date as well. So here we're looking at, excuse me, we're looking at a bearish security. So bearish security makes lower lows and lower highs. It's oversold, and I said this on 24th of February. This is the actual label from 24th of February, and I'm like, that's it. That's done. It's gonna bounce. Where is it gonna bounce? It's gonna bounce towards the red line. Did it bounce towards the red line? No. It made a new low. So see how it's sometimes this oversold, overbought concepts are just not really working. And so it was oversold, and then it became more oversold. Now, the bounce is super likely. I think we're very close to the bottom, at least the intermediate bottom. So we'll be looking for a bounce, and this is the reason why I think utilities are also going to be bouncing, is because treasuries, so TLT treasuries, is hopefully going to be bouncing, and the interest rate, so the treasuries and the Treasury bond yield, Treasury bond fund and Treasury bond yield move opposite to one another. So right now we have quite high interest rates compared to what they were just a few months ago. So on the date of the insurrection of 6th of January, the interest rate was like 1.8 for the 30-year Treasury bond, and now it's 2.49, so it's 37% higher. That's significant. If the, like I said, if the treasuries make a low and bounce, then TYX, Treasury bond yield, should come down, which will also help utilities. Here are the intermediate bonds. So this is 7 to 10 year Treasury bonds. They broke down on 16th of February. So not as volatile as TLT, but you can clearly visualize it as well. There's the breakdown on 16th of February, so I would have shorted it right there, basically. And you would have been correct. Looking at even shorter term bonds, so this is 1 to 3 year Treasury bond fund, SHY. This one is kind of similar to what I've been showing some of the other funds. So notice how narrow this trading range is, and this support just didn't even hold where I'm hovering 24th of February. Nothing really happened there. There's the breakdown on the 3rd of March. So now we're in the bear market. I mean, if you really want to short this thing, then be super careful right now, because notice how close we are. This is a super tight trading range, and let's say it moves a little bit higher and closes above the blue line. That means we're in an uptrend again, so be careful here. Your stop, if you're decided, let's say you're going to be thinking about selling short, and let's say it comes up to the red line, where would you put your stop? If you are shorting, you need to put your stop at the blue line. Okay? And see how tight the stop is? It's very tight. So what that means is, if you're gonna short, be cognizant that you can get stopped out super easy. That's your stop right there. But overall, looks like vast majority of bond market is entering into a bear phase. That would not be great for bond investors, obviously. Overall, if bonds are dropping purely from the intermarket perspective, then stocks should be gaining. Right, briefly looking at the yield curve. So yield curve, what the heck is yield curve? Yield curve just means that we're looking at, for example, 3 months, 2 years, 5 years, 7, 10, 20, 30 years. So the further you go, the higher the interest rate, right? And I just showed you that the 30-year Treasury bond yield is currently at 2.45, right? So that's slightly higher than what it showed, 2.32. So it's about 2.45, okay? And the shape of it is what's called normal. So normal meaning that the closer you get to the short term, the smaller the interest rate, and the further you go, the higher the interest rate. That's normal thing. What we worry about is something called inverted. There, that's called inverted yield curve. So there's one here in February of 2007. Notice that a few months later we had a collapse. So correlation and causation. This is a correlation. I'm not sure if it's a causation. So did the interest rate, or rather, did the reason why the stock market dropped was because of the yield curve, or is it because it happened at the same time? You see? So right this instant we see no such thing. So from this point of view of analysis, where we were thinking, okay, so if we have an inverted yield curve, then the stock market has a tendency to collapse afterwards. Right now we have none of that. We have an absolutely normal curve. Will it change? I think it would depend on the short-term interest and short-term bonds. So this is why I spent so much time on this SHY. This is because it's a short-term interest, and if the short-term interest rise, so we need to see a significant rise in short-term interest and or a significant drop in long-term interest for the yield curve to become like that, inverted, you see. But right this instant we're really not in danger of that. Right, let's move on to the dollar index, DXY, and I have a strong suspicion that it is bottoming. It's trying to bottom. So right this instant it's around what's called weak resistance. So yellow line is a weak resistance. If we're coming from the bottom, we're thinking opposite. We're thinking resistance. If we were coming down from the top, we're thinking support. So I think the dollar, and this is a index, so it's euro and the British pound and Japanese yen and Swiss franc and other ones, easily we can see a rally towards the red line. So this is 1.86%, and I kept saying, I trade gold, I trade precious metals. So for me, it's actually important to know what the dollar is doing, and the dollar seems to be strengthening, and we're looking right now at gold. So these are gold futures with all the inflation expectations and everybody having their own opinion. I trust nothing. I trust no one. I don't even trust myself. I only trust my math. And my math is telling me right this instant that we had a breakdown into a bear market. Okay, this is a big deal. If you trade gold, if you trade precious metals, we're seeing a reversal. You see, up to very recently, I had no problem buying gold. In fact, we were buying gold. This is an actual alert from 23rd of March. And then another huge opportunity in May of 2019. Okay, but something is happening, and now after a very large run and an all-time record high here on the 7th of August 2020, we're seeing the opposite, you see. And also the way this indicator is curved up, you can see that today we're again closed below the red line. So that's a second signal, you see. That's a second signal, and again, where's our stop? Above the blue line. So could I be wrong? Absolutely. If I'm wrong, then we will move higher and close above the blue line, and then the bear market would be over. But as of right this instant, I actually think we're gonna do the opposite. So we can project into the future again. I mean, we could move a little bit higher, maybe to like 1820, but once again, this is still in a bear territory. So we're just waiting for another leg down, you see. I mean, we already got a nice big leg down, and you know, if you listen to my videos, I started worrying about it from this candle, 9th of November. I mean, this is a huge candle, and this type of candles don't just disappear. Then there was another huge candle here on the 8th of January, and looks like we have moved at the very least the depth, you know, something like that. You see, we're moving. So I have a feeling we're going to continue lower from here. We may bounce a little bit, but overall, I think the direction is down for gold. Looking at silver, and you know, silver is somewhat different, but overall it's not that different. So silver actually made a new record on the 1st of February. On the 1st of February, gold was already at support here. See, it didn't, nothing happened, you see. So silver is stronger, but silver is not, you know, it's not in vacuum. It's still a precious metal, and it's tied to the price of gold, tied to the price of to the level of where the dollar is trading. So because silver it's XAG USD, right? So if silver is traded in US dollars and the lower part of the equation US dollar becomes bigger, stronger, it would pull this pair down. Okay, so that's the way to think about it. So silver, gold, we're seeing potential for a collapse, I think. Gold, my God, I mean, this just looks vulnerable. Easily we can make a new low, easily. We'll see. And I wanted to finish up with random coins. Sometimes I look on, I trade occasionally on Binance. In the United States, you can trade on Binance.us. Outside of the United States, you can trade on Binance.com. And if you have Binance.com, you can go both ways. You can go up and down, you know, go long and go short. In the United States, Binance.us only allows to buy. But, you know, there are so many cryptos, something is going up, so you can always find something to trade. And, you know, if Bitcoin is already, Lord knows where, in the stratosphere, you could look for various other random things to trade. So looking at this Enjin coin, looking just back in November, October, it was in the downtrend in the bear market, and maybe would have shorted it like there, for example, you know, and closed below the red line. I wasn't trading, I'm just showing it to you as an example, and you would have made a little bit of money, most likely got stopped out here. Something happened, and then we had a breakout number one, which didn't really work because you can see another breakdown below right there. But then finally we had a true breakout right there on 18th of January, and then it just took off. So at this point I'm thinking, okay, we're in an uptrend, we need to start buying. Where do we buy? So we need to, the way to buy when we're in an uptrend is once it comes down to the blue line, we just buy it around the blue line. So for example, right there on the 22nd of January would have been an opportunity. And you know, there are multiple opportunities, but overall, this is how I trade. You know, I'm thinking about buying around the blue line, and notice that this is just too close, especially the last trade. I mean, right there, you had an opportunity to get on 23rd, 24th of February. That is just some obscene amount of percent. It's almost 500% gain. It was 60 cents here. It became, you know, $3. So this is how we traded. You can trade pretty much any security. Continuous securities like this cryptos, you can trade on any time frame. So let's say you can trade in 30 seconds. Yeah, you can trade in 30 seconds. So here's 30-second time interval. Actually, we will go to 1 second. Well, this one is kind of difficult. Let's go to 5 seconds. Yeah, okay, much better. So here's a 5-second chart, and there's the breakout. Your stop would be at the red line. You know, you'll be sitting here for a little while. Let's see if it goes anywhere. But overall, this is how we trade. Okay, so go to EveryoneCanTrade.com. That's MasterChartsTrading.com or EveryoneCanTrade.com. Same place will get you to my website. First of all, I'm very excited to announce we now have an advanced stock scanner. This thing is super powerful. It scans lots of stocks. It scans close to 9,000 stocks on the United States exchanges. We have multiple lists that also you can select which stocks will be you will be alerted about. So for example, gold, silver miners, semiconductors, biotech, dividend aristocrats, just some of the funds and some of the stocks that we scan, and we scan the stocks within the funds so that you get the actual stock lists. And then once you get the stock list, you can put it enter the ticker into TradingView and then look for great opportunities. So such opportunities as, for example, Finvolution, recent alert and recent actual trade. Nice opportunities here on 29th of December for, easily 200% gain, depending where you exited. So that's, very nice run right there. Another recent alert was for TripAdvisor, and this thing, if you got in on the 10th of November here, chances are you still should be in this trade, because really there was no, right there where I'm hovering, 22nd of December, it touched the blue line but didn't really close below it. So potentially you could have been still in this trade. And man, look at this move. Went from like 20 to 60. So something is happening in a travel industry. All right, that's it for this week's recap. Again, head over to MasterChartsTrading.com. If you just want the indicators, get the trading indicators, $30. They're available for this interface for TradingView.com. 7-day trial. Can't really beat it. So Speculator Bundle now has a little bit better price. So Speculator Bundle includes 2 blogs. So one blog I have is the Elite blog, which covers large caps and ETFs. And the second blog I have that you will get for the Speculator Bundle is the speculative stocks. So we trade smaller stocks, and especially the ones that are doing what's called a breakout. So this, for example, TripAdvisor is a breakout type of trade. And how do I know it's a breakout? Because before, you can see that TripAdvisor was trading, for example, here before the below the yellow line, and then finally something happened right there on the 10th of November, and it started trading above the blue line. And this is what I call a true breakout, because before stock was below the yellow line, and now it's truly in an uptrend. If you want to see a pullback trade, then we could look at, for example, small caps, IWM. So small caps broke out already here on the 11th of August, and then they pulled back, and we bought them here on 24th of September. But the breakout is this type of trade. The stock was below, basically 52-week lows, and then it broke out. So this is what we look for in the Stock Speculator newsletter. So if you get the Speculator bundle, it used to be $100, but now for $100 you get advanced stock scanner. So this thing is worth every penny. You will get tons of alerts about exactly the stuff you're interested in, you see. But if you want to hear more of my stuff, then I think the deal is perfect. At $69.95 right now, it's a great price. You get the Stock Speculator, you get the Elite blog, you get the basic screener. So this is a basic screener. You only screen about 250 stocks. And you get the indicators, of course. But once again, I highly recommend get the advanced speculator, because you will get just the entirety of everything. All right, that's it for this week's recap. It's a longish video, but let me know if you have any questions, and I'll talk to you later. Thanks for watching. Bye-bye.